Hey guys, Mike here. So, oh boy, what a day in the market. And yes, it was a day in the market. Boy, everybody's like, oh my God, the market's selling off. What are we going to do? What caused this? I just don't know and stuff. And of course, I'm going to set you to ease in just a minute on that. But we got a lot of stuff to get through, so I'm going to get right into it. We're going to the data and then earnings. A boatload of earnings today, which some surprised the heck out of me. And we'll get into the ones that did. Also, I mean, the companies were literally guiding up for the rest of the year. One of them was a stunner in my book. I want to know what you think about that. But basically what you got here is simple. Hold your breath here. This was stunning. The new family houses sold annual. Obviously, you see it popped up again. Family houses sold total month over month. Pops up and you're like, whoa, okay, I guess people are still buying these prices and at these high interest rates. And then we had consumer confidence come out and guess what? It dropped. I just cannot believe that. How could you believe that we don't have confidence in what's happening? And if you look, I mean, the big drops happen when? When recessions hit. Are we going to hit a recession? That's what we got to find out. But this stuff right here is not what had the market going, ooh, look, we got to sell off, we got to sell off. Then you had manufacturing data come out. Guess what? I'll give you a hint. It wasn't good. You had to come out in two different areas. And again, shows contraction, shows things aren't very good. One thing it showed was, and this is where the market didn't like it, that wages were still going up. All right, so that means the Fed has to keep tightening, supposedly. Right? Any narrative that has the Fed tightening, the market does not like. But what really sold the market off today was plain and simple. You had huge earnings coming up. And the reason why, you can see right here, I mean, Microsoft down 2%, Tesla, SPY. I mean, we hadn't seen this kind of stuff in a while, right? And the reason why this is a problem, and I shared this with the members last night, look at March 13th to now, right here on the NASDAQ 100. 5 companies made up 70% of that run up. 5 out of 100. 6 stocks out of the 100, excuse me. 5 companies because Google has Class A and B shares. 70%. So guess what happens if earnings go bad for Google and Microsoft, right? It's going to bring down the market. Now, that brings me back to this morning, right? Companies roll out. They end up reporting 5 guide up. The one that stunned me the most, and let me know which one stunned you the most, was General Motors. Not only did they beat top and bottom line, they guided up for the rest of the year. Their margins increased from 18 to 20.1%. I'll show you something their CFO said in just a second. But that was the big one. But the real big thing, and I'll show you this too, raising prices. Been raising prices by double digits, a lot of these companies, and they're going to continue to do it in 2023. Even though all the data shows that the input costs going in are coming way down, they're still going to keep raising it, and you can guarantee them keep raising it as long as you keep paying, because I don't buy any of these products you're about to see right here. And if we look, what happened after hours? Oh my goodness, look at this. Google, double beat right here. I'm just going to read this straight out of our Discord for the members here. Also announced they're going to do an additional $70 billion in stock buyback. An additional, right? Microsoft, double beat. Then you got Visa, double beat. Oh my goodness. Chipotle, double beat. Raising prices like crazy at Chipotle. And they said they're going to keep raising them, by the way. Enphase got crushed. They're down 16% after earnings. Then you had the cloud business, both for Microsoft and Google. And guess what? Microsoft's up 27% year over year in their cloud business. Google's up 28% year over year, even though it is slowing down. And here's a stunner after this big sell-off today. Look at the new 52-week highs. Pepsi, McDonald's again. Spotify, Starbucks, Merck, Eli Lilly, General Electric, GE of all things, Chipotle, right? What all these have in common? They are raising prices, and they're going to continue to raise them. Again, there's no soda in this house. I don't go to Starbucks. Don't go to Chipotle, right? I'm sure I go to places that do raise prices. But you can see PepsiCo raises revenue growth forecast, so they got it up, right? Despite raising prices 13% in the last quarter, they still have strong demand. They will continue to raise prices. Kimberly-Clark's makeup, I'm assuming, I don't buy makeup, but my wife does, again, raises price by 10%, right? They're going to continue to do that. Then you had General Motors, I believe their CFO said, everybody sees price declines around the corner, but American consumers are willing to spend big on new cars. And so I guess that corner just keeps getting farther and farther out, right? And of course, I want you to see what's happening after hours. By the time you get this, it may have changed. All of a sudden, the Q's down 1.89%. and they're up almost 1% actually as I just looked back at this. And after, I will see if it holds. SPY goes up, Microsoft goes up 5% right here. You see even Apple flat basically. And then some other ones which are up. Meta 2%, Amazon 2%, and then you go to Google, it's up around 5%. And the reason why this is a big deal is because the weight they make up. I just showed you how much they made up of this move up since March 3rd, right? And so if these after hours numbers hold in pre-market tomorrow and we open up and they starting to ramp up, then guess what's going to happen to the indexes. And before we continue, guys, if you're getting anything out of this, please hit that like and subscribe button. Think about sharing the video with your friends and family. And if you're new here and you like the content, please hit that subscribe button. I really appreciate it. They're going to rise again. And I even just saw where Google CEO, like in his introduction, said AI over 50 times. So, let's put in the comments, one, which earnings today surprised you the most, especially this morning. Again, mine was GM. I'm not surprised Microsoft or even Google beat top and bottom line. It's really going to see, where their guidance is going to be. That's going to matter. Remember, Apple usually don't even guide, I don't believe. So that's not even going to matter next week. But just let me know. But again, AI is going to be the name of the game. They're going to say it 1,000,000 times over, and the algorithms are going to go, oh, AI, woo, and just go crazy, right? So that leads me to this. Yesterday, I told you, you saw how the SE minis were, net short a lot, right? But now you have this right here. Hedge funds have never been this bearish on treasuries as they're basically shorting the heck out of this, right? So leverage funds, net long / short positions on the 10-year treasury futures. And look at this right here. Never been that low as far as they've been tracking this. I'm going to show you an actual interview from Bloomberg where they're talking about this. And so take a look at this real quick. It's very short.
So, Valerie, what do we know about shorting treasuries?
Look, there's two things notable about the CFTC positioning data that came out on Friday. One of them being the most net shorts on that 10-year bond on record. But the second one being is that their shorts were across the curve as well. 2-year futures, 5-year futures, 10-year futures, and 30-year futures all had net short positioning from the hedge fund community. It could suggest that we could be very ripe for a ferocious rally if yields don't continue to creep higher. But it's also prudent to ask, why possibly are they positioning short? Well, let's look at the calendar. What we have this week, we have U.S. GDP, the first advanced reading of the first quarter on Thursday, followed by the Fed's favorite measure of inflation, the PCE metric on Friday. Perhaps the hedge fund community is positioning for a very upside reading on GDP and perhaps a hot PCE number, posing a big question about this Fed pause in May, leading yields to run higher. But I want to caveat that with one thing, Matt, and we need to remember that hedge funds use treasury futures not just for directional plays, but also for RV trading as well. We know that vol has been declining significantly in the last 6 months. Perhaps this is just suggesting there is a build of a major RV trade in the 10-year part of the curve.
And we can see right here, we're pretty much guaranteed almost to get a 25 basis point hike, right? I mean, 92% chance this is going to happen. This is what the market's been kind of pricing in a way, if you want to put it that way. And if GDP comes in hot, if the economy is just booming, the Fed's going to do what they have to do. And any narrative that says, yields will go higher, or the economy's good, that's quote unquote almost bad for the stock market, right? Because they'll keep raising rates or hold them higher for longer because there's supposed to be all these rate cuts this year, even though you're listening to these companies going, we're just keep raising prices, which of course, what does that do to inflation? Doesn't help it. Tell you that right now, right? So doesn't help. And that's where, greedflation comes in. But, in a way, you can't blame the companies. You got to blame us because we're the ones going out there buying it, right? We just keep buying it up. So they forget it. We'll just keep raising the prices then, right? So that's what we got to do. And so, again, think twice before you buy Coke or Pepsi or go eat out at Chipotle or whatever, I mean, go on strike or something. But they're going to keep raising them. And every single earnings call I hear them talk about, just keep on raising them. And there is no stopping. Right? As long as supply or demand is there, don't matter. So people are buying not just Teslas, they're buying GM cars. And it's kind of weird. You think, here's Tesla cutting, and their margins are shrinking, and yet there's GM expand? Really? And they're not cutting prices as far as I can see, as far as they're mentioning, right? They're saying demand's still there. And so I was like, oh, okay then. So that gets us into real quick, just 2 charts I'm going to look at because all this is going to change tomorrow morning depending on how we open. And that's what we have to see. how we're going to open, right? Is this going to hold or not? But you can see, obviously, below 410, so watch out for that 410. And it's not the daily close, it's the weekly close. Plus, we closed down below, or almost right at the expected move. It's between 406, 407 is what options was expecting. And so we'll have to see if we get a bounce back. You see the RSI on the hourly is oversold and stuff. And usually when you get around that weekly expected move, especially if these gains on the big stocks hold up, and you got that gap above right there that didn't get filled, then you can see it move up because we're sitting in this huge demand zone right there, right? And so we'll see if dip buyers, they come on in and push this up and see on that one. I kind of expect at least a short-term rally if these hold, of course. And then that brings us to Microsoft. And the reason why I say this stuff about if it holds or not, because guess where that puts us? If we open up anywhere near the prices at now and after hours, then you're looking right there at that huge supply zone again. So basically major resistance that hadn't been able to get through. And so that's another thing. And Apple still remain where it's at. Now, this brings me to this one. This is what I want to see how it plays out. I showed you guys this. This is the VIX divided by the VIX 3-month average. And I have the SPY included in here. And you can see I told you guys when it enters that range, it's been pretty good at calling tops and stuff. And when it got in that range, what happened? We've been basically selling off ever since. Now we're out of the range. We got to continue. Is this sell-off going to continue or not? And so that's why when I showed you this, I think it was like 4 videos ago, it shouldn't shock you or anything. And obviously the VIX was up huge today. And so we'll see. I mean, is it going to continue or not? I don't know, because it is hard. It seems like it's almost possible to push this market down because of what's going on with those 7 stocks, right? Or basically 10 stocks in the market. It just keeps propping this thing up. And eventually we'll see if they actually fall or not. But that leads us into more earnings tomorrow. And it's not anywhere near as big as the ones today. But you can have Boeing, Humana, Hilton, Hess, Tech, ADP is going to really talk a lot about employment for sure. And then in after hours, you'll have Meta, Roku, and then of course Teladocs. Roku and Teladocs ain't gonna shift no market, but we'll see if Meta keeps going. There's a lot of people saying you need something to help push this up, and so we'll see if earnings will be the catalyst for that or not. Now, as far as data tomorrow, all about the real estate industry once again, but then you're gonna have durable goods dropping to 830, and so that's something to pay attention to. Wholesale inventories, retail inventories is going to be a big one. A lot about oil and things like that. But the big things will be, is this just an after-hour rug pull, right? And so we'll see, because we've seen these big moves up in after hours, and then all of a sudden pre-market hits, and oh my God, the yield started to go back up, so the market's got to come down. And the big thing is, I shared this with members and stuff like that. It really is the fact that there'll be a big dump on, or a big update on liquidity tomorrow. And so I always update the members every morning. I will update them on that, the things that make up certain forms of liquidity, which tend to help drive this market stuff. And that's been stalled out, right? And as it stalls out, the market has been stalled out, right? And so when I mean stalled out, I mean stuck in a range. Not like it's not moving, but it's just stuck in that range, right? And so, again, it wasn't any accident when the Fed pumped $300 billion in all of a sudden. They said, no, it's not QE. Everybody said, yes, it is. And the market went up pretty dang fast with that. So, ever since then, though, it's just kind of and really what I'm saying, the market in this case, I'm really talking about the QQQ, because the SPY has other things that can push it up. The QQQ, as you can see, though, is tech. And so what tech needs is yields coming down, liquidity coming in, right, to really drive that one up. So just FYI on that one. And the big 10 stocks I keep talking about that are moving, that are proven day and night, that really are making this market up, while the other stocks just kind of trade in this range type deal, trying to set a stage 1, maybe into a stage 2, right? Those stocks have become just these safe havens where the big boys are just piling into them, almost like value stocks in a way. That's what they're basically treating them like, and a few of them pay dividends, so they're enjoying that. So anyway, hope you got something out of it. Let me know. I want your feedback there in the comments. I always read every one of them. So if you got anything out of it, hit the like and subscribe button, and I'll see you guys tomorrow.